Welcome to Trading the Close on this Monday. I'm Toni Valliere with Verified Investing. And here's what's making headlines today. Trump Media is down more than 25% after the company reports a net loss of $58 million in 2023. Tesla is hiking the price of its Model Y cars by $1,000. The Dow drops over 250 points to start the second quarter. Meanwhile, Treasury yields jump. Gold also jumping to record highs. And fast food workers in California at chains with more than 60 national locations are now earning $20 an hour. Let's get a check of where things stand just before the closing bell. On this Monday, we're seeing a lot of red today. The Dow down 207 points. 0.52%. We've got the NASDAQ slightly down more than 7 points, 0.04%. We've got the S&P 500 down 3 points, 0.06%. Oil is up, gold is up over $8, and then we've got Bitcoin down over $1,600 on this Monday. Let's bring in Chief Market Strategist Gareth Soloway for a recap of the day's trading. Kind of a down day for the start of April.
Yeah, it kind of turned out to be like more of a neutral, but we opened sharply higher, which is interesting. So generally the first of the quarter and the first of the month in a bull market, those are going to be up days because people are putting money into the market. They have money from their 401ks or moving into their 401ks on the first of the month. So there's automatic money flow. So anytime I see selling out of the gate, like a gap higher we had in the markets today and then selling, I'm always like, okay, because it's essentially telling you that institutions are selling into that. And that's always something to be aware of. New quarter, are institutions starting to unload? So let's take a look at the S&P here. And you can see again, S&P started higher today and it kind of just drifted lower. And then the mid portion of the day, super sideways, just sideways chop. A little bit of an uptick, maybe some short covering into the end of the day here. But overall, it was really quiet, light volume, which by the way is somewhat normal because when you have a 3-day weekend, it's what's called a hangover. So generally people were with family yesterday for Easter. They were doing lots of things and they come back and everyone's a little lethargic. Maybe they had a few too many drinks. And therefore, again, market in general, the market is just slower. Lighter volume, like a hangover, like literally you're like moving slower, right? So now the kicker is this though. Here's your SPY. Remember, we finally confirmed outside of that range, outside of this wedge pattern. We've just been kind of hovering here, but I think again, and again, I could be wrong here, but I'm guessing that we're going to start to curl over like this on the S&P. That's what should happen based on probabilities, based on the fact that we have confirmed below this key wedge pattern at this point. So that's something to watch very closely. A couple other things to look at. We know the NASDAQ 100 already confirmed, and we can see again, this is just China chopping sideways action here. Same thing, I wouldn't be surprised if we see a rollover in the new quarter as well. So
that can still happen, even though we might be looking for it to go straight down immediately. That's not always how it happens.
It's actually very rare, and I think that's important for people to hear, because when you're at, so when we've basically look at how the market pulls back a little, then goes to new all-time highs, pulled back, new all-time highs, pulled back. So that conditions us psychologically. It makes us think that, oh, every little 2% pullback, that's when we have to buy. And so it's usually that's what happens, right? So 2% or 1% pullback, up it goes. And now if we dip just a little bit, people just are conditioned to do that again. The kicker is going to be when it doesn't work and catches people off guard. But in general, at the highs of a chart, you see a lot of buying the dip. At the end of a move, at the end of a bear market, that's when everyone throws up their hands and says, this is horrible, I'm just going to sell everything and run away. And that's when you get those massive down moves at the end, right? So if you look at a market, it's very much like this, right? It goes stair step up like this, and then it starts to come down like that. And then finally at the end, it just collapses at the end. That's how markets generally work, right? Unless it's like COVID where it's just all out panic, right?
Yeah,
that's a different story.
So but that's the pattern to keep an eye out for.
Yeah, it's just more look for those little pullbacks where it coaxes people in. They always try to get the retail investor to go long, and then they want to flush those out. And there's like exit liquidity, right? You need exit liquidity for the institutions so that they can dump into that money, and that's what they're looking for.
All right, I was in the trading room today, of course, heard a lot with Micron Technology, MicroStrategy, Universal Health Services was also a big mover today.
Let's look at
some trades.
Yeah, I did. Micron. So I had a short earlier today on Micron. We had some good money made on that one here. And again, this was the chart. Actually, you can see a bunch of trend lines here. I know it looks kind of like messy, but basically we shorted up in this range here, and then you kind of got this opportunity to retrace and go short again. And then one of the things I did was I bought down here, and it started to flush on me, and I got saved. This was an afternoon trade. Afternoons, by the way, for day trading, super tough. There's just not volatility. Traders need the big swings, right? This is what we love. This. Once it goes like this, it's algorithms, and you're basically fighting computer programs, and it's so hard to do. So again, that's I ended up making a whole 4 cents per share, of course. But again, that's the afternoon. But up here, I was able to take almost $1 gain per share.
Okay.
And that's because you had look at the size of these moves. You just get these huge moves to the upside and big pullbacks. But nice move on Micron today. What were some of the other ones you were looking at?
Let's see, MicroStrategy.
Oh yeah, in fact, one of the ones. Yeah, let's look at MicroStrategy here. So we'll talk about Bitcoin in a minute here, but MicroStrategy again. This is a trade that I actually told people about to be looking for it to roll over in the game plan, and we got this big like 12% move down on Friday. And the reason this was to me a very obvious indicator was if you look at the RSI, we could see that there was a huge negative divergence developing, right? So you see how you have a high here and a higher high, but the RSI was showing us a lower high and then another lower high. And that's called, again, a negative divergence, right? So that's telling you that money, like you might get the retail to be jumping in it, but at the same time, this is telling you that relative strength, so the underlying, the smart money is actually unloading into that. And so that's something I look for quite a bit in chart. It's not the only thing that makes me take a trade, but it is something that I look for. The other thing, too, is that the insanity of it, and I wrote an article about this, is that they own about 205,000 Bitcoin, which is about $15 billion in Bitcoin, which is incredible. But the company was trading at $32 billion. So it was essentially like if I'm a Bitcoin fan and I'm buying Bitcoin, why would I ever buy MicroStrategy? It's the equivalent of me paying $140,000 for a Bitcoin. Why wouldn't I just go buy Bitcoin at 70, right? So that didn't make sense. And you could say their underlying business has value. They only do about $500 million in revenue per year. It's not that much. Like the company would be a couple $2 billion company. So the valuation didn't make sense from a fundamental point of view, and the technicals were also saying sell off, and that's what we did see here. Now, eventually, I think this is going to go a lot lower, but at least it's going to really be determined by Bitcoin. But you can see again, if I get that line here, you're basically looking at this now as a trend line to watch. And by the way, Bitcoin, we should probably talk about Bitcoin too here real quick. But Bitcoin has the same sort of trend line. And interestingly enough, this is something that for my members, and by the way, people need to check out the new Verified Investing website.
Absolutely.
Really awesome. So much quality, free information out there, folks. But again, one of the things that I was thinking about was, we got this weekly, monthly, and quarterly close above the previous all-time high of 62,000. And in my head, I'm like, man, that does sound bullish, and it is kind of technically bullish. But is that just what all the big money wants us to think before they kind of do a rug pull and just kind of dump it out? And sure enough, today, before you knew it, we were trading in the 68,000 range. We bounced back a little, but it's just interesting to see how those metrics go. Everyone anticipated it to be like this moonshot off of that level, and we haven't seen that at all. So
no.
I will
say
Trump
media as
let's talk about that in just 1 second. But I will say this, you still are holding the bull flag. So there's a classic bull flag. So again, technically, yes, it's a down day. We haven't had this huge rip, but you still have the makings of maybe a bullish breakout at some point. You just want to see it hold this sideways consolidation. Now, speaking of Trump media, DJI I think it was in Thursday's trading the close. We talked about this, right?
DJT, I
DJT,
believe.
that's right. Yeah. There we go. Appreciate that. So one of the things we looked at, folks, and I talked about this, we talked about how when you have a candle that opens higher and it sells off, and then opens the next day, sells off. And that's what this is telling us. It tells us that it opened here, and then it closed down here. So it had this drop. Yes, it went higher at one point during the day. Same thing here, opened here, closed here, opened here, closed here. It's telling us that the excitement amongst the retail crowd is causing it to gap up. And then someone or some players are just dumping into that. And when I see that 3 days in a row, that's not a good sign.
Yeah.
Like we talked about this on Thursday in this exact program, and then look at today what happens. So these are the things that investors, I always want, like this, the whole idea is education, right? If I had this education when I was a new trader, I wouldn't have lost so much money learning how to trade. And so the idea is help others to learn this kind of when you see this, it's not a signal to buy, it's more a signal to just step back and just say, listen, let's give it a few days to see where it is. Now, interestingly enough,
it's a true red flag.
Yeah, exactly. Here's, look at this right here. So this is support. This is called a gap fill, and then we're right there, there. And again, I'm not saying it's a buy now. You got to kind of be aware of other factors here, but at least that makes more sense than paying up here in this upper range. At least you're all the way back down here from 70s back to the high 40s. So interesting on that. What was another trade? I'm trying to think. There were a couple other good opportunities. Was there any?
NVIDIA, I think you guys started with. Walgreens had some movement as well.
Let's talk about Walgreens, right? So this is an interesting one here. So Walgreens had a big dump. I want to show this to you guys. So all right, so this is your daily. So number one, this is your intraday chart, the 10-minute chart. So Walgreens on Thursday, because Friday the markets were closed, had earnings. The stock actually gained on earnings. It actually, from where it was trading prior, it was a little bit whippy, but it actually had a pretty good move. Now, what we saw today was that whole entire move reversed, which is not a good scenario. But what you see here is if you look at the volume down here, I don't have the volume on this chart, but this heavy selling and this is not normal trading. This is institutional.
Doesn't look like it.
Right.
Yeah.
So basically, you put the pieces of the puzzle together and you say, okay, it's the first day of the quarter. We know that first day or last day of the quarter, there's a lot of funds maneuvering. They're deciding what do they want to keep in their portfolio, what do they want to get rid of. So my guess is this price action, especially after it was up so nicely on earnings, there was a fund today that probably had a couple million shares, and they just said, you know what, we don't want to be in this position, so just sell it. And that's why you got this acceleration on such heavy volume, because it was the end of the day. They wanted to be out of it by the end of the day, and they dumped it. And they probably were dumping it all day long, but they just had maybe 500,000 or 1 million shares left, and they just said, get rid of it all and just dump it on the open market. So in general, this would be something where I would say, okay, maybe this, if the fund is truly out of this position, maybe it does bounce back tomorrow or the next couple of days. That's assuming no bad news comes out. They just reported earnings last week, so if they were going to say something bad, I would assume they would have said it already. So this might be a play where you look at it and say, okay, maybe this can, I mean, again, I'm not saying it's going back here, but could this at least go back, maybe somewhere in this vicinity, maybe to 20, 20 and a half?
But
that's
you're
a possibility.
This isn't something you jump on right away?
Well, again, it's all about risk tolerance, right? So like it's a matter of, do you want to take that risk when something's falling like this, essentially catching a falling knife? Or do you want to step back and just let the dust settle? Now, you might miss the trade if you let the dust settle, but at the same time, there's always another trade. It's not like, the markets are stopping trading forever. There's always going to be another trade tomorrow and the next day. And so it's really personal preference. How much risk do you want to take?
Sure. Okay. One other chart, gold or oil, you pick. I know.
Oh,
I know
man,
you like
those
your
are
natural
both.
gas. I know we've got viewers that really like those. So
okay.
Just to touch on.
So one of the things that, and I'm glad you brought this up. So today's action in the markets, the fade from the rally, this is directly related to yields, big spike, and the dollar. The dollar, I haven't seen the dollar move like this in a really long time. If we look at the intraday, this was incredible, just watching the dollar go like this. And then finally it kind of stopped going up and just went sideways. But the kicker here on the dollar is that you actually did confirm today a breakout. Now, again, it doesn't mean that a breakout means it's going straight up, right? So it's not like it's going to go like this. But what it does mean is that now you've established yourself above resistance, which is now support. And even if it pulls back, you probably go something like that. And that means, again, you would have said to me or to anyone out there, that's expecting the Fed to cut, that the dollar would be strengthening. We would have said, no way. And here we are, and the dollar is doing pretty much the opposite of what everyone thought it was going to do. I mean, everyone was like, oh, dollar weakness, dollar's over, all this stuff. And here we actually have a confirmed breakout. And I think this is stemming, when we see the yields, this is telling us that investors are now seriously thinking that the Fed may not cut 3 times this year. Might be 2, might be 1, maybe nothing. And again, we saw that PCE data on Friday, which was kind of neutral, but the CPI and the PPI were both very, very hot. So which one was, you said one other one too,
I
right?
said gold and oil.
Yes. So
and natural gas. Yeah. I said pick one.
Pick one. All right, well, we're going to do gold and oil. We'll do two of them. So gold had a little bit of an update today. So again, you can see the bullish consolidation off of this up move, classic bullish consolidation. There's your breakout. To be honest, again, the mere fact that gold was positive today with the dollar that strong is like almost unheard of. So gold has a bug in it, and it is just rocking right now. I will say that I do have a short-term resistance at around $2,325.
Okay.
Just to show people really quickly, bear with me, where that comes from. I go all the way back to 1980, which was the last massive pop on gold. We know that that was when inflation was crazy. We just simply connect it through these highs, right? So we have this high to this high. And so again, I guess it's around 2340, 2350. But if we shoot up into that level, I would expect a retrace, and then eventually it goes higher as well. But I think that would be a big stopping point where gold would probably need to consolidate after such a tremendous move. And
interesting to go back that far. You wouldn't typically do that on most charts, would
yeah,
you? Is
just when you get to these crazy levels where you have to go back that far. And gold's had such, I mean, really, you don't hear about gold. Gold's up like 15% in just a couple months. That is again, that's not usual for gold. So lastly, let's just touch on oil, because oil actually hit my key level today. I did pull the trigger on a short. For those of you out there going to Verified Investing, I just launched my commodity service. But one of the things that I've been talking about was this area on the chart of oil, where if we zoom in, it actually just hit my two upside resistance levels, right? So we have this area right here. And so I did pull the trigger on a short. And for those of you out there that want to check that out, check it out at verifiedinvesting.com. It's under smart money commodities. But my guess is oil's going to stall out here and maybe chop around, but eventually I think it's going to drift lower. And the catalyst for that, I do think that the jobs data at some point is going to crack and it's going to get weaker. And I think that's, again, with inflation rising, why you could see a 10% correction in the NASDAQ this quarter.
10%. Okay, I do want to mention our website, of course, and help me out because there's so much on it. It truly is a one-stop shop for somebody like me who's trying to get the news and give you, the major headlines. I have up 4 or 5 different websites. I'm constantly scouring different websites. I don't need to do that anymore. It's a one-stop shop. You've got your headlines. Our traders are writing articles. You've got articles all the time. There's earnings calendars. There's
economic and that was really what I wanted to do with kind of guiding this homepage, is to make it where where I have to even go to lots of different websites for what earnings are today, what economic data, what's the macro charts looking like. Like tomorrow we have the JOLTS data on the homepage. There's the JOLTS data chart, what it's been, what the projections are, all of that stuff. And so almost in a weird way, I made it for myself.
Yeah, it's selfish. That's good,
so
though.
like so that I only have one place to go, but then it's so useful to everyone else. So I hope everyone checks it out. It's and again, I said this on my trading room, is that my goal is to almost make it open source, where like if enough people suggest something that would be helpful, we'll add it onto that website. I just want this to be the place to go for data, no hype, just good quality information that really helps investors.
And education, and there are constantly new courses by all our different traders that are coming out, so keep an eye out for that as well. Gareth, thank you so much. And also remember that you can catch Gareth navigate the charts in real time every weekday morning at 9 a.m. on his show, The Game Plan, right here on the Verified Investing YouTube channel. That's before the market opens. And we want to thank you so much for watching Trading the Close on this Monday. We will be back tomorrow on Tuesday. Make it a great rest of the day.